0.7 higher. The mid-caps are not doing too badly, 0.4. Even if there was a minor dip, it's getting supported, the mid-caps as well. Advanced declines are a very pretty picture. 4 stocks in the green for 1 in the red. And with that positive backdrop, let's invite our market master, Tushar Pradhan, the CIO of HSBC Global Asset Management, joins us. Tushar, good morning. Thank you very much for joining us. Well, the inevitable question is, what is your guess or your firm's guess from the Fed? And what is the post-Fed scenario likely to be? With a hike, and the second scenario without the hike?
Well, actually, you've posed the question quite well. In fact, that's where we are on the horns of this dilemma, whether they do it or not. I think if you take conventional wisdom, they have to bite the bullet. They have to take it, because that will remove a lot of uncertainty in the markets. But on the other hand, if they think, for example, I think the only big reason where they will hesitate is that inflation data in the US is still very low. And unless inflation really starts to pick up, interest rate hikes really don't make that much sense from a more macroeconomic perspective. So I think they will have to take a call at some point of time. If they do not do anything at the moment and they kind of defer it, it will be very important to see the language. Even if they actually do hike, it will be important to see the language. If the language is very dovish, saying that, look, we've done this, it was in the wings for a long time, and that we believe that we will now have to wait and watch, or something of that nature. If that happens, then I think that's a big positive to the markets. A huge overhang across the globe will just go away. And I think we will see a significant upswing in terms of at least people's expectations in terms of what's in for them for the next few months at least. But if they do not do anything, and if the language is not very clear, I think we are in for another set of uncertain periods.
So a hike with firm guidance would be the best scenario for the markets.
Absolutely.
Yeah, Sonia.
Okay, fair enough. Tushar, hi, morning. What kind of an upside do you see for our markets from here on? Because, this year was supposed to be the year of the bulls, but look where we are. The market is down 5% a year to date. From now for the next 12 months, what kind of an upside do you foresee? Or is there any upside at all?
Well, actually, whatever upside we were looking for is not delivered. So actually, in one way, it's good because it is yet to be delivered. I think the upside has not been delivered for, I think, a very simple reason, that earnings have just not come in. The expectation of FY15 has not been met. The expectation of FY16 now is severely downgraded, so which means we have seen probably 2 years of flat growth. Now, if you don't have the denominator moving at all, I don't think the market is going to go anywhere. However, on the other side, people think that because the earnings are not there, the PE is expanded, and that's the reason for it to fall. But actually, that's not the case. I don't look at it that way, because I think 2 consecutive years of flat earnings growth. If you look at the macro, for example, I think it's completely reversed. So for the first time, you have a fiscal deficit which is well under control. You have a current account deficit which is not likely to run away again because of very strong commodity headwinds driving that thing down. You have inflation which is trending low and has stayed low for so long. You have very positive intent from the government. So, while they have not been able to do something, it doesn't really mean that they don't want to do anything. It's just that it's caught in red tape or it's caught in some issues.
But all of that is just not translating into earnings. So how long do you think it will take for earnings to pick up?
Well, actually, the actual number in earnings will take even longer. But we don't wait in the markets for all that long. So all I'm saying, and it's an interesting question, you said, what will the next 12 months do? I think by the end of the next 12 months, it will start discounting what's likely to happen. So the market is not going to wait for the earnings to come before it starts to move.
So the earnings don't come for 12 months?
I would think that,
the smell of earnings may come in 12 months.
I mean, I would think that the earnings will not come at least for the next 2 quarters. But I think what will happen, however, is because we've had this delay, is that when they come, they will come very strongly. So the percentage expectations really will not form any part of this linear analyst spreadsheet expectations. It's actually going to be quite non-linear when it comes.
Okay, just hold on to that. That's the new listing, Sadbhav Infra. It's had a pretty good listing. I mean, that was not the expectation. It was expected to be a slightly weaker listing because of the huge debt that the company has on its books. And, you know, the profitability also of the company has not been impressive. But there you have it. The company's listing was subscribed about 2.2 times. So the subscription was not bad. But that's a decent listing that we've seen for Sadbhav Infra.
Okay, it's a 77% subsidiary of Sadbhav Engineering, a company which is more familiar to investors. And the listing, at least it started off on a very good note, 8% higher. Let's see how things pan out from here on. It's not extraordinarily good in terms of subscription twice, but let's wait and see if they are able to maintain this kind of a gap up opening. Okay, Tushar, that brings us to how you would place your bets. Would they be economy-facing bets?
I think there is a big myth out there that being defensive is a good thing in difficult economic times. But if you look at valuations, the defensives, I don't see them defensive at all. Because first of all, the lack of growth is going to hit the defensives as well. So when we had a trend growth of say between 12 to 15% on an average for most FMCG companies, or what we call a defensive for a long time, we're not going to see that kind of earnings growth this year. So which means that the valuation which most of these defensives supposedly trade at is at a bigger risk next year. So I would think that while I'm not going to be hugely pro-cyclical, for risk and reward, I think there is a lot more interest, especially I think your new IPO might actually give you a signal of that, is that if you expect good things to come back into the economy, I think it's the main drivers of the economy which will benefit more. So I think from that perspective, the valuations in this field are a lot more attractive. And I would play pro-economy because we are talking about a 2-year period here. We expect it to come around. So nothing really in the anvil, nothing in the next quarter, nothing that really will cheer the hearts, so as to say. But I think on a longer term bet, you might be safer given where the valuations are.
I request you to just hold on for just 5 minutes talking about that new listing. We'd like you to listen in as well. Would you put your money on names like this?
Well, we definitely think that infrastructure is one of those places where India still has not done anything yet. So if you just compare where China is in the last 20 years and where we are in the last, 10 years, there's really no comparison. The real hope is that the economy gets a significant boost by having these infrastructure projects actually take root. And these are the signs that tells you that it's going to be a sustained economic turnaround and it's just not a cycle anymore. So I would hope. I mean, I'm not saying that I can predict with any certainty, but I think there is a lot of hope around this because this is actually going to lend a lot of industrial production, a lot of strength to continue, because as you know, once the infrastructure project comes in, so does everything along with it. And
yesterday's export numbers were very troubling. The quantum at 21 billion is a 5-year low. Will you see a fresh slew of earnings downgrade, at least for some externally facing countries?
I think the significant drop in earnings in exports is just largely because of petroleum products.
No, so that has been there throughout.
Yes.
I mean, and that matches with the fall in the raw material as well.
That's right.
But engineering exports fell by 30%, and in aggregate it was 2 billion lower.
Yes. I think that's also, I think we kind of give ourselves a lot of credit to have our currency, which has actually weathered the storm a little better than most of the others. And what that has absolutely made is that the attractiveness relatively of these has come off a little bit. So obviously there is going to be that impact. Quality becomes important. But in today's world, when we talk about technology transfer being so easy, a lot of the Eastern European countries, South Africa has dropped substantially in currency, Australia has suffered. All of these really become very attractive, especially in the middle engineering, not really differentiated engineering space. So I would think that's quite natural to see.
Okay. I just had one question on the global front. A couple of weeks ago, there was a lot of doomsday scenario being spoken about because of what was happening with China. Do you think the worst of the global shocks are behind us?
Very difficult to make that call because you never know what's there around the corner. But if you look at, I think there is a very troubling report sometime yesterday that I read about will China lead us into the next recession, the globe that is. And there are very significant reasons to believe that the whole power shift away from the US and the Western world into China has been really developing over the last 7-8 years. Now, when we say that the largest engine of global growth is going to, slow down, what does that mean for the global economy? So I think that's number one. We still haven't got over that hump yet. So we have actually not any idea whether it's going to be a soft landing or a hard landing. So I would say that let's wait for this to work out.
Yeah.
I don't see any other cloud as big as this at the moment.
Yes, but can Make in India, Make for India, counter this at all? Are there any signs, or is domestic demand as disappointing as global demand?
Actually, it really is quite silly, if you ask me. We have such a wonderful opportunity ahead of us. We have a severely under-infrastructured country. All it requires is, and the money is not wanting either. I mean, if you look at the commitments that the global investors would like to make, even in direct investments, if you let them, is massive. So what China did for the last 20 years, if you're able to do for the next 5 years, we can easily take this forward. The problem is not that easy to solve. While on a theoretical basis it appears easy, but when you come down to the nitty-gritty, it is difficult. So I'm hopeful that it's not going to be just a quick turnaround that India replaces China. It's probably going to be more gradual. And I think if you're more reasonable in your expectations, there's a lot of money to be made in the 5-year term. Okay. But you're not going to see a China-like change in India overnight.
Fair point. Tushar Pradhan, pleasure speaking with you. Thank you very much for putting all that into perspective. So it will be a slow growth, and it's not going to be betting on the ease.